Yeah, speaking of things getting clean, Tyler, oil market got its clock cleaned this week. Look, a couple of things really came together. I mean, I've been trying to claim the mantle of most damaged asset class by the trade war for oil, but copper's given us a run for our money. But I think it's commodities in general, because the trade war fallout has been impacting the Asian economies and the German economy, the manufacturing centers of the world, which are energy intensive, the most. You have South Korea in recession, for example. And then the other thing that was propping up oil prices were these Iranian tensions between the U.S. and Iran. It got pretty stoked. I mean, the rhetoric was as hot as I'd seen in years, to the point where we were almost at a tripwire, it felt like.
But you would think, mightn't you, that reduced supply from Iran would support higher prices?
Oh, or I was alluding to the fact that were we staring down at armed conflict with Iran?
Armed conflict, which would further slow the economic activity.
The change, sort of like how the Fed pivoted. The Trump administration pivoted. They talked about tamping down the situation. That was their exact phraseology across the media outlets. So it was a real signal to the oil market that, all right, we are not on a tripwire. We're not staring down the barrel of any kind of gun or mines in the Persian Gulf. And so that security premium that rapidly came into prices, Ty, came out.
So concern about economic activity is one thing. But on the other side, where are supplies? Supplies aren't bad, are they?
Supplies aren't bad at all.
At all?
At all. There's other worries about Libya, but that oil is flowing. And look, the firewall against these geopolitical time bombs that go off from time to time anymore is the U.S. production of 12 million barrels a day and exports some weeks that get as high as 3.5 million. That's really helping to displace these brief, acute supply outages.
There's a lot we don't know, but make a guess. Over the course of the summer, what's the range for oil prices, high to low?
Well, on the downside right now, with the way the prices have broken down, you could see a landing zone down around 52 on the chart for WTI oil prices.
Today we're 58?
58, yes.
58.
We were as high as 64 earlier in the week. We broke through 62, 60. We flirted with breaking 58. 52 is the landing zone on the chart. Look, on the upside, to the extent something does happen, a miscalculation or some kind of event does happen in the Middle East or in the Persian Gulf that registers, you're talking $75, $80 a barrel.